Most traders still chase price, but advanced traders read rejection. This video is about understanding how and why price fails to go higher, and how to recognize it in real time using the MCR model. Welcome back to Candle Theory. Let's get into the truth. Before we talk about profiles or rejections, you need to understand what the MCR actually is. MCR stands for microcycle range. It's the first 22 minutes of price action that forms a range, usually before 9:30. That range is not random. It's a map of the market's early positioning. From that 22-minute range, we build our profile, a structure that price either rejects or attacks. The rest of the market session is the story told around that range. We're going to talk about profiles. Each MCR profile isn't just a box. It's a memory of where buyers and sellers try to establish control. Each profile has the same structure. As I explained in the previous video about the one candle rule, it will have a balance zone, which is going to be the body of the profile, and it will have an imbalance on the edges, which will be the wick extremes. When price pushes back into a profile, we don't ask, is this bullish or bearish? We ask, is this expansion holding or failing? Failed expansion attempts. If price wicks above a profile and fails to hold, it's telling you something. That area rejected expansion. It tried to go higher, it couldn't. And when price fails to accept a wick above a profile, it's not just weakness, it's a draw towards the other side, a reversal born from failed intent. Let's talk about the last 60 to 70% of a candle's expansion. If we were looking at the 15-minute time frame, that would mean the last 6 to 9 minutes of that 15-minute candle is going to be our area of interest that we're going to be looking at. Now here's the deal that most people miss. It's not the first 5 minutes of a candle that matters, it's the last 6 to 9 minutes. Why? Because that's where price either holds its lie or folds into the truth. If price is moving up, wicks above a profile, and you're expecting a short, watch what happens in those final minutes. Does it stall? Does it distribute back down from the wick? Does it fail to close strong? That's distribution. That's where the smart money unloads and price collapses back into the MCR imbalance. We're currently looking at an example from London MCR. We have the 15-minute on our right, looking at our higher time frame candles, and then we have the 1 minute right here to assess the time. Let's play it through until the next 15-minute gets created and see what happens above this profile. We can see at the start of this 15-minute candle, raided the top of that previous profile. Let's count out where this is right now. This is 5 minutes into the 15-minute creation. So that means we have 10 minutes left on that 15-minute candle. So if we have a reversal imminent from that end of a 15-minute candle, usually from like 9 to 6 minutes, what can we use in that time to see price going bearish? The same way we explained the one rule of a candle, let's see how price reacts from this. In the last few minutes of that 15-minute candle, we finally have a close below this candle that initially pushed up. And we're now coming up to the end of that 15-minute candle, showing that the first 30% of that candle creation was more just manipulation playing out. And then that last 9 to 6 minutes is the distribution of price going away from that previous high that it's failing to go higher on. I'm going to be showing one more example. So let's see how price raids the low of that previous profile and see what the 15-minute is doing. So this is happening in the last 6 to 9 minutes. We're getting a raid of a previous profile. What can we use to try and see how price can reverse from this. So we have a wick at the low. We do not have a wick right here, but we have price rejecting at the same candle. So until we go above that, I don't think we're going to go bullish yet. We still do not have a 15-minute closure below that previous profile. We have a candle count to go higher. Price is currently rejecting off this previous profile that failed to close lower. And we can see price perfectly reacting off of wick gaps created from that first rejection of price. This is the type of results MCR can give you. A model based on logic, not lag. Profiles show pressure, wicks show rejection, and the final minutes show the truth. This has been Candle Theory. Thank you so much for watching. If you guys want more questions about this model, join our free Discord in the description down below. And I'll see you guys pretty soon.